Welcome to Generational Wealth. In this video, we will discuss how to use the DXY on your daily analysis. So let's begin. So what is the DXY? If you do not already know, the DXY is the U.S. Dollar Currency Index. So now, of course, in the Forex market, we're trading currency pairs. So we're taking one country's currency and trading it against another country's currency. So, for example, the USD has the DXY, then you have the Japanese yen that has JXY that also has its own, let's actually pull it up pretty quick, also has its own currency index. Now, if you look at the Japanese yen index, you see how choppy this looks, how bad, it looks. It's making some trends. You can see the trends, but it's too many gaps, right? Too many gaps. Now, as well as the USD, the dollar index, so much better, way better. You can see the trends, you can see the consolidation, you can see all the liquidity zones as well happening. Now, this DXY, you can use this in your daily analysis because whatever happens with the dollar is going to reflect on this chart. So, and that includes fundamentals, all the fundamental analysis for any news events, any fundamental event that takes place, positive or negative, can impact the DXY. So now, only thing about that, you have to understand that not all of the news events is going to make this DXY just go bananas. So how do I use this when I trade? So first off, I already got liquidity zones identified as these black horizontal lines. These are my liquidity zones. So, and I drew these all on the daily time frame. So on the daily, I like to draw my liquidity zones, see what's going on the higher time frame. Then from there, I go down to the 4-hour. From there is where I can start drawing trend lines, right? When you start to see trend lines, you can start drawing trend lines all over the chart. Let's draw a couple trend lines where we see the price is trending. Right? We see we see the trend lines. We see the activity going on, we see it, right? So on the 4-hour, we could see the trend lines happening better than we could on the daily time frame, of course, right? We could see it okay on here. But as we see, as we back on the daily time frame, we see the trend lines. We see that we could identify the liquidity zones so much better. We see exactly where they at. So you see strong areas, strong liquidity zone areas, right? So how can you use this? So another thing to remember, a lot of people might not be aware of this, but the USD currency index and the Euro USD is like inverse. So let's look at the Euro USD. Look at the Euro USD inverse to the DXY. Right? Crazy. DXY also is very similar to the USD check. Very similar structure going on with both of these. So there's a lot of correlation. So that's also another reason why you can use this and help you use this when making your analysis. Because any USD base pair is pretty much going to be in correlation with this DXY. So that's rather you're buying or selling. So you just have to keep in mind. So if you're looking, for example, at the DXY to drop, then of course you want to look at the Euro USD to go long. Same for gold to go long. USD check, of course. USD CAD, USD JPY. We wanted to pretty much do very similar structure to, not structure, but as far as trending as to the DXY. USD, the USD check, because those are the USD base where the USD is first. So those pairs we want to be looking at the similar structure or similar trend as well as buying or selling off the DXY. So if we're going to be looking for buys on the DXY, we want to look for those prices on the USD check and the USD JPY, USD CAD, etc. So on the 4-hour, we see the trends happening, but let's just go to the 1-hour, and we just start right around here, and we'll look at price. So how can we identify the weekly structure? So the weekly structure tells us what? Sunday, Monday, Tuesday starts the trend, Wednesday, Thursday, Friday reverses the trend, right? That's what we kind of go with. Wednesday, Thursday is our midweek reversals, right? So Monday is right here, Tuesday, Wednesday, Thursday, right? So right here on Monday, trending up, retail traders are buying, right? Come Wednesday, reverse. Okay, there go your midweek reversal right there, your weekly cycle structure, right? It's going up. Monday, we got the trend trending up in one direction. Wednesday, Thursday, it goes in the opposite direction. This Monday, looked like the move happened on a Tuesday where it just kind of reacted off last week's low. We didn't get any reversal, midweek reversal right there. And this is on a 1-hour time frame. So usually is the 1-hour time frame is usually where I usually do all my drawing, right? We can see right here, of course, Monday, Tuesday, Wednesday, Thursday, London session. Right at London session, that's happening. This low, this stop hunt. You see it right here, the W formation. The stop hunt was right at London session. Stop hunt at the low, right at London session, and took off for the reversal. That was nice, and that was a beautiful reversal. If anybody would have caught that, based off of of course, the other currency pairs. But this will guarantee you when this move happens like this, it's very similar on these other USD based pairs. Very similar, all correlation, all in correlation. So it's It's crazy. And like I said, this is happening over and over. I mean, you see it happening right here over and over. Monday again, Tuesday, Wednesday, retail traders are selling. Wednesday, Thursday, maybe reverse, so shift the trend, like always. So, and on the daily cycle structure is doing the daily cycle as well. It's doing the daily cycle, and we don't even have to go to the 15 minutes to even see that. We can see it happening on the 1 hour time frame. So DXY dollar index can help you out a whole lot when trading and making your analysis if you're trading USD based pairs. Now, I use the DXY a lot to when I start off. I start with the DXY. I like to know what the DXY is doing because I can then just go right to my USD based pairs. Being that I'm trading New York session, that's when all the activity is happening at New York session. So USD based pairs, of course, is what you want to go with. So, and I mean, you can check out any other pair currency index. Some of them might not just be as clear as the USD. Might be a little more choppy, but I guarantee it's trending. You'll be able to see the trends. You'll be able to see strong liquidity zones to help you identify whether you're going to buy or sell. So, man, this DXY is happening. Like this stuff is happening at London and New York session. Like it's happening exactly at these times. The trade, the London session, the New York session is doing the Asian consolidation. It's breaking out. All that is happening on this DXY. So if you're not familiar with the DXY or wasn't familiar with it, go ahead and back test it. You know, see it for yourself, check it out for yourself. This could help you out a whole lot because I mean sometimes it's a little clearer than some of the pairs. Sometimes this will help you out a whole lot based to make your analysis based off what the choppiness of another pair is doing. So this is for USD based pairs only, of course, because it is the US Dollar Index. Use this to help you learn and make your daily analysis.